Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at the E-mini. This is the ES, the E-mini in the United States, how it unfolded on Friday the 28th. So this is Friday the 28th of January. Particularly as this was an excellent trade and an excellent example of some of the more advanced routines that we do in the software. And it also shows you how you can use some of our indicators as leading indicators to help anticipate where market turns are going to unfold. I want to start on the 15-minute chart. So it's the 15-minute chart of the ES before the high. This is what unfolded on Friday, a sharp decline, but I want to show you what happened before that. So if I take the chart back, way back before even the Friday opened, and what we can do is try and anticipate areas of support and resistance. We go to our DP tool, our decision point tool. So from advanced chart analysis, we just click on our DP, choose swing high or low. We then look at the last swing high or low. Here's one here, and we then look to see whether the market gets up into this level. If it does, then that's an area where we expect the market to find resistance and as such make a top. Remember, this is on a 15-minute chart, so this was done well before the trading day on Friday even opened. And as you can see, the market went along, and then on the start of Friday, this is at 9:45, so it's the first bar on Friday morning, we went up into the DP and then made a reversal. But the point being is you knew about this level before the market even got there. So this was an indicator that was on the chart in advance. So we know at this level here, which was the about the 1299 to 1300 level, that we were anticipating resistance. So let's now go down to the 3-minute chart and see what we got. If I go to the 3-minute chart, and again let's move back to even before the market opened. This was before the market opened. What can we do? We can put our decision point targets on the chart in advance. So as before, I'm just going to click here, click on this prior pivot, and as you can see we get a resistance area up here before the market's even opened. There's another important swing here, so let's do the same off this. Click off this, and again we get another slightly bigger, more important target, basically both in the same area around the 1299 to 1300 level. So let's see what happened. Market opens, goes around a bit, comes up, then makes a red sell reversal bar. This is our first indication that a high may be unfolding. If we go to a high volume VSC spike, you can see the bar before, which was this one, was a high volume spike. So we know that if the market goes into a level with a high volume and then reverses the very next bar with a red sell bar, we know that's an indication of professional selling, not buying, professional selling, and as such we're anticipating a decline to come in. We look at the stochastic, there's also a very prominent divergence coming in here as well. All of this indicates that this is probably going to make an important high. Our first target would be our DP off this low. So our first target for the trade would be, if I put the risk reward on, a nice 2.2R profit. So let's see what happens as the market unfolds. So the market went straight into that and straight down into this level. We then look at our STF indicator. If I've gone a few bars too far, our STF indicator here is now crossed our strength band. You see this grey bar? This is our strength band. This tells us whether, or gives an indication of whether we think the market is going to trend or go further. Because our STF indicator has crossed the strength band, we think that this decline is going to go further, therefore we swap to our ATR stop to run the trade. Also, if we go back to our 15-minute chart and we move forward a little bit, we actually get a larger, which I'll go back a bit, so I want to show you how this is in advance. We put the DP on from here, so we get a larger support level just under the 1290 area. So if I go back to the 3-minute chart, you see here we're still 1293. The DP from the 1290 area is down here. If I click off this low, it's this DP down here. So we think that actually not even are we going to find support at this level, we're actually going to go down a bit further. So we then look at the risk reward here. It's at a lovely 4-to-1. We move forward, and indeed the market does go to this level. But again, the STF is strong, therefore we actually think that this level is not going to hold either, and the market's going to go down even further. Where to? Well, for that we go back to the 15-minute chart, and what do? We then use the DPs again to place the areas in advance. Again, I say that stressingly, or I stress that, in advance, where we think the market's going to get down to. So again, just click on the DP. The next low is right the way down here, so we click on the DP here, and this gives us a target right the way down here. Look, right the way down at 1272 to 1275, right the way down here. So not only just this target, but right the way down. And as we know, that's exactly what the market did. The ES then declined through this DP right the way down to this bottom one. So let's see what that meant on the 3-minute chart. Well, we're then using the ATR stop to trail, as we've always said, so it kept you in, kept you in, kept you in, kept you in, and then finally stopped you out just about here. So let's see what that did for our risk reward. Our risk reward down here was actually, well, I missed that slightly, it was actually slightly less than that. It was actually, whoops, again, so my mouse is a little bit wiggly here at the moment. It was actually stopped out there at a 10.2R trade. Yes, a 10.2R trade. So just look where we got into this. We actually got into this short trade at the very bar of the high of the day. That's where our target's indicated. And we then trailed it all the way down here to have a profit of 10R. Now let's just stop and think what 10R means. 10R means 10.2 times the initial risk. So in this trade we were risking $400, so the return on this was just over $4,000. Yes, that's $4,000 return for a $400 initial risk. This is the size of this trade here. Absolutely amazing. But do you see how it all unfolded exactly as we're anticipating? Not reacting to, but anticipating. Do you remember on the 15-minute chart we had our DP levels in advance before the market even opened. We then had our first target in advance before it even got there. We then had our second target in advance before it even got there. So you weren't reacting to the market, you're anticipating. And then on the 3-minute chart we had this level in advance where we thought it was going to. We then had our initial area in advance ready for us. We then had a trend indicator that indicated that the market was going to go further, and then helped us with our trade management, which was our trailing stop, our red bars, and that kept us in all the way down here for a 10R profit. Just as a PS for advanced traders among you, this area here you could have used for what we call a trend continuation trade, so you could have pyramided a position off this. So not only just making 10.2R profit, but you could have added positions as the market went past this level here. Sorry, I missed that. Again, my mouse is a little bit wiggly. You could have come in just below here with your stop above this level. Again, using the ATR stop coming down, so you could have had a second position here for a possible plus 5.8R trade as well. So add 5.8 to 10.2, and that makes 16R. On this particular trade, we're risking 2% of our $20,000 portfolio, so 16R at 2% per R unit is actually a 32% return on your account. Yep, that's a 32% return on your account in just one trade in one day, by pyramiding as we went past this level here, and also having our spectacular trade from the very high of the day right up here to then use the ATR stop to come right the way down here for a massive 10.2R trade. But as you've seen, this wasn't a surprise to any of the MTPredictor users. They actually knew in advance that this level here was going to be the level where you wanted to be looking to sell. They then knew, because of the ATR indicator here, that the trade was going to then carry on further, and everything worked out exactly as anticipated, and how the MTPredictor software helped you not only get into a trade, but also managing the trade all the way down as well. Amazing, absolutely amazing.